and welcome to the Wapic Insurance third quarter 2017 Investors and Analysts Conference Call. My name is Bode Ojeni, Executive Director of Sales and Distribution. And I'm joined today by Mrs. Yinka Adekoya, Managing Director, Wapic Insurance PLC, Mr. Dayo Arojolu, Managing Director, Wapic Insurance Ghana Limited, Mr. Anotimi Ogunleye, Managing Director, Wapic Life Assurance Limited, Mr. Olufemi Obaleke, Executive Director of Subsidiaries, Mr. Peter Ehime, the Chief Risk Officer of the company, Mr. Olushola Ojeni, the Chief Investment Officer of the company, Mr. Joseph Ike, the Head of our Financial Reporting Unit, and Ms. Zina Giwamu, the Head of Strategy, IT, and Investor Relations. For your information, the 9 months result being presented at this session was published last week in the National Dailies and also uploaded on our corporate website for your use. During this call, we will discuss our business outlook and might make some forward-looking statements. These statements and comments are based on our expectations as of today. Actual events and results could differ materially due to a number of risks and uncertainties. Before we jump into the presentation, we'd like to keep you abreast of a few housekeeping matters. We are streaming live, and as such, the presentation is shared on your desktop and laptop. At this time, we advise participation to be on listen-only mode. I would therefore request that you be kind to mute your microphone so that you can hear us clearly, and so that background noise does not interfere with the audio. At such a time as the presentation is concluded, we have left ample time in the agenda for questions. Instructions for participation in the question and answer will follow at that time. We will also be taking questions that come in via the chat feature on Wapic. During the Q&A session, please limit yourself to one question and possibly one follow-up question. We will attempt to moderate the question as seamlessly as possible. As a reminder, this conference is being recorded. We now move on into the presentation proper. The next slide speaks to the outline of the presentation. We'll be talking a bit about Wapic, the regulatory environment, the operating environment, the financial overview, and what we see as the outlook for the last quarter of the year. I'll be taking us through the first three sections, speaking about Wapic, the regulatory environment, and the operating environment. Mr. Joseph Ike will take us through the financial overview, and I'll be back thereafter to present the outlook for the last quarter of the year. Moving on to the next slide, slide 5. Wapic Insurance PLC is quoted on the Nigerian Stock Exchange, and we operate through three entities. Wapic Insurance PLC, which is a general business entity and which also doubles as the holding company for the group. Wapic Life Assurance Limited, Wapic Insurance Ghana Limited, and we have an associated company, Coronation Merchant Bank Limited. We have 6 regional offices in Nigeria, based in Abuja, Benin, Enugu, Ibadan, Kano, and Port Harcourt. Total staff strength, professional staff, is 206. Our total assets is in excess of 29 billion, while our asset under management is in excess of 18 billion naira. Our shareholders is in excess of 850,000, and we have 13.4 billion ordinary shares of 50 kobo each in issue. We are listed on the Nigerian Stock Exchange, and we have a GDR depository bank with the Bank of New York Mellon. We are rated by AM Best, and our current rating is C++ on financial strength and B+ on issuer credit, both with stable outlook. Our actuaries include Ernst & Young for Nigeria and QED for the Ghana subsidiary. We partner with leading reinsurers, including Munich Re, African Re, Continental Re, Waika Re, Ghana Re, and the Nigerian Re Insurance Corporation. Our auditors are PwC. Moving to slide 6. We'll be speaking to the regulatory and industry environment. During the period, the National Insurance Commission, NICOM, recently introduced 4 different forms of operational guidelines for the industry. These are the Web Aggregators Operational Guidelines, the State Government's Implementation of Compulsory Insurance or State Financial Advisors Guidelines, the Independent Agents Operational Guidelines, and the Mutual Organizations Associations Community-Based Macro Guidelines. Also within the period, NICOM did say it's concluded arrangements to start the second phase of its Market Development and Restructuring Initiatives, the MDRI. The objectives of the MDRI are to enforce compulsory insurance products in Nigeria, sanitize and modernize the insurance agency system, wipe out fake insurance institutions, and introduce risk-based supervision. Also within the period, NICOM had commenced partnership discussions with the Economic and Financial Crimes Commission, EFCC, to fashion out strategies to combat insurance fraud within the industry. Within the period as well, we saw a change in leadership of the Nigerian Stock Exchange with Mr. Abimbola Ogunbanjo being elected as the new president of the council. Within the period also, the Security and Exchange Commission affirmed its vow to enforce electronically transmitted annual reports to shareholders. The DG of SEC, Moni Guazo, disclosed that the pilot scheme will take off this year and will be reviewed from time to time. The objective of this is to ensure that all investors get the reports on time and study it thoroughly and be in a position to ask relevant questions and contribute to the shareholders' meetings. Moving on to slide 7. We'll be speaking to the operating environment. I'll be speaking to this under 4 different headers: inflation, crude oil, GDP growth, and the foreign exchange rate. Inflationary pressure in the economy continues to moderate, with inflation year-on-year receding for the 8th consecutive month to 15.98% in September 2017. This represents a new low since May 2016. Looking forward, the inflation rate is estimated to close at about 14.9% towards the end of the year. Real GDP growth was 0.55% in the second quarter of 2017 against the contractions witnessed in the previous quarter of 2017 and the corresponding quarter of 2016, respectively. This marked the technical exit of the Nigerian economy from recession. It is believed that the economy now has a more stable footing to bolster medium-term growth premised on recovery in the oil production and fading inflationary pressures. On the crude oil side, crude oil price hit a new high in Q3 2017, rising by 2.7% to $53.38 per barrel, which is the highest level of the crude oil price for the year. We expect that the continued demand by OPEC and non-OPEC producers will extend, and the plan to extend output cuts will keep the oil price at the high levels. On the FX rate, the Nigerian foreign exchange market benefited from improved liquidity and rate convergence across floating segments, following CBN's continued dollar injection and autonomous inflows through the new investors and exporters windows. Naira further appreciated to 365 Naira to the dollar at the end of Q3 2017. Improved global oil price and oil production is expected to further boost market liquidity. I'll now hand you over to Mr. Joseph Ike to take us through the financial highlights. Mr. Joseph Ike, please.
Thank you. I'll be taking us through the financial overview of Wapic Insurance PLC as of September 2017 with the following outline. We'll look at our financial highlights, our income statement review, a review of our statement of financial position, and a review of the assets under management. Slide 9 speaks to our group financial highlights. Our gross premium income has seen a growth of 22%, which impacted our net underwriting income that grew by 33%. Our underwriting expense equally increased by 18%, in line with the growth in our gross premium income. Our underwriting profit witnessed a growth of 107%, up from September 2016. Net investment and other income declined by 41%. Our profit before tax decreased by 37%. However, our operating expense ratio improved from 53% to 42%. Our net claims expense moderated by 16%, from 57% as at the same period last year to 48%. On our financial position, our financial assets grew by 27%. Equally, our insurance assets witnessed a growth of 43%. Our total assets grew by 10%. Our shareholders' fund witnessed a slight growth of 3%. Our return on assets and return on equity remained positive at 3% and 5%. I'll now look at our income statement review. Slide 11, on our income statement review. Our gross premium rose by 22%, up to 8 billion as of September 2017, from 6.4 billion as of September 2016. Our insurance expense equally increased by 27% to 2.9 billion. The increase in outward insurance was to balance our risk exposure, particularly in oil and energy and general accident portfolio. Our claims grew by 13%. Our insurance expense experienced a 24% increase. This is in line with the growth in our top line gross written premium. Underwriting profits benefited from the growth in GWP. It doubled from 626 million as of September 2016 to 1.3 billion as of September 2017. Our investment income grew by 100%, up from 862 million in September 2016 to 1.7 billion as at the close of the current period. We witnessed a decline of 92% in our other operating income, mainly because we had a one-time foreign exchange gain realized on our foreign currency portfolios, which is not available in the current period. Our other operating expense moderated by 4%. The implementation of our transformational strategies ensured that the cost optimization strategies we planned are being realized. Our profit before tax dipped by 37% from 1.5 billion to 962 million in the current period. The impact on the PBT was the impact seen on our other operating income. Looking at our product performance, our general accident product has remained the top performer for 3 consecutive quarters now, with a 24% premium contribution to the group GWP as of September 2017. It is closely followed by motor at 23%. Oil and energy had moved into third place at 20% for the period. Our life business has also continued to increase its contribution to our GWP, closing at 18% as at the current period. In terms of underwriting profits, driven by sales performance, our general accidents and oil and energy remain the 2 most profitable products as of September 2017, reporting a 42% and 32% respective contribution to our group underwriting profit. In terms of our underwriting profit margin, marine remained the highest underwriting Mine remained the highest, contributing underwriting profit margin of 42% as at Q3 2017. Look at our group expense. Our net claims increased by 30% to 2 billion during the period, mainly driven by the growth in claims payouts. Of course, in line with the growth in our GWP, we were expected to pay more claims, but this was cushioned by the benefits from our increased net underwriting income, which moderated the impact of the claims on our underwriting performance. Our underwriting expense increased by 24% compared to the previous period, but is well within in line compared to the growth in our top line. In slide 14, our operating expense declined by 4%. This is owing to our cost optimization efforts. The OPEX ratio decreased by 28% from 74%, by 28% from 103% to 74%, driven by the improvement in our top line and the reduction in our operating expense. Our insurance expense saw a growth of 24%, and it's well in line with our reinsurance optimization strategy to ensure that all our exposures are adequately covered. We expect that as we round up the financial year, we are confident that our reinsurance optimization focus will yield the desired benefit. Our revenue, our group total income saw a cumulative average growth rate of 14% over the past 4-year period, growing from 6 billion as of September 2014 to 10.2 billion as of September 2017. Our GWP contribution by business group shows that large corporates remain the leading contributor with 46% contribution to the group overall top line, followed closely by our financial institution division at 22%. Our Ghana subsidiary has continued to show improved contribution to the group GWP, contributing 14% as at the end of September 2017. Our group profit position. Our group recorded a noteworthy underwriting profit performance as at September 2017, resulting in a year-on-year growth of 107% to close at 1.3 billion, up from 626 million as at September 2016. We see a return back to our underwriting profit position as at 2015. The profit before tax closed at 952 million for the period. This was a reduction from the prior year results. However, our return on assets and return on equity have remained positive, and we expect this to improve going to year end. I will stick to our historic financial highlights, looking at our life and our non-life business. Top line, in terms of gross written premium, our life business has witnessed a cumulative average growth rate of 21.5%, and the underwriting profit derived from that business segment has also witnessed a cumulative average growth of 39%. Our non-life business equally have experienced a positive cumulative average growth, growing at 7% over the period 2014 to Q3 2017, and as well as the underwriting profits, which witnessed growth of 2% cumulatively. We'll look at our group GWP slide path over a 4-year period from 2013 to 2016. Compared to other companies we are tracking, we have grown from 24th position out of 34 insurance companies to 12th as at December 2016. I'll now take us through this financial position review on slide 20. Our portfolio realignments have seen our cash and cash equivalents decline by 75%, only to take advantage of high-yielding assets in other asset classes. Of course, this can also be seen by the increase of 27% in our financial assets, which reflects our strategic switch from cash and cash equivalents to benefit from elevated yield in other fixed income securities during the period. Our insurance assets have also seen a growth of 43%, because this is driven by the increased insurance expense during the period arising from the growth in our top line. Overall, our total asset has grown by 10%. Trade and other receivable making up our outstanding premium from brokers related business have continued to reduce in line with our strategy to ensure we comply with the no premium, no cover policy. Our investment property portfolio has declined further, and we tend to continue divesting from this asset class to other high-yielding portfolios. Our insurance contract liability has increased by 20%. This is following to the growth of our GWP during the period. Highlights of our financial position show that in comparison with financial year 2016, our earning asset to total assets ratio has decreased slightly by 8% due to increased investment in fixed assets to enhance our operation. Our group total asset position grew by 10%, up to 28 billion from 26 billion as of December 2016. Looking at our insurance and investment contract liabilities, these have also seen a growth and stood at 8.7 billion, representing 20% increase from the position as of financial year 2016. Total liability grew by 22% in the period under review. This is mainly driven by the insurance contract liability recorded for the period. Our group shareholders' fund remained relatively flat, but experienced a moderate growth during the period. I'll now take us through our assets under management. An overview of our short assets under management showed that term deposit decreased by 50% for the period compared to 2016. This is largely as a result of claims payout experienced during the period and the realignment of our asset class to take advantage of opportunities in other investment areas. We saw increased investment in quoted equities, reflecting our fund distribution for identified long-term prospects. While our quoted equities have grown by 49%, enhanced by portfolio stock essentials and general capital market recovery. Of course, the value of our investment in assets in associates grew by 7%, reflecting the benefits of the group share profits in the associates. Our investment properties continue to decrease, and we intend to wind down that investment class in line with our strategy of divesting from that asset class. In order to improve our liability matching, asset liability matching, we have increased our investment in bonds by 83% from its financial year 2016 position, in line with the structure of our underlying insurance contract liabilities. I'll now return you back to Mr. Bode Ojedi to conclude.
Thank you very much, Joseph. Ladies and gentlemen, we are on slide 24 now, where we present to you our outlook for the future. And I'll be speaking to these under 4 headlines: the financial, the operational, sales, and people. On financials, we expect continued year-on-year growth in our top line figures in line with our strategic forecasts. We continue to proactively drive for solid solvency margin ahead of an expected change in capital adequacy rules by the National Insurance Commission. We'll continue to maintain focus on cost optimization in order to meet our strict cost-to-income targets. On operations, we have transformed our corporate website into a world-class e-business platform and customer experience touchpoint to enable sales and enhanced customer engagement. We are set to launch a self-service omni-channel platform for customers to conveniently connect with us. This will deliver growth in premium, increased customer satisfaction, as well as improved service delivery and internal efficiency. We'll continue to enhance underwriting processes through improved risk assessment and selection. On our sales side, with the laudable performance we have witnessed in our innovative smart products in the insurance market space, we expect a further deepening of our retail insurance penetration as we continue to grow our customer base. We would continue to optimize the Wapic Life offerings with the launch of new products in the coming months and in the coming years, such as annuity, funeral insurance, etc. We will continue to leverage local content regulation in the oil and gas sectors to grow our corporate business. We are set for a full implementation of our bank insurance model across all major state capitals across the country, in line with the growth potentials of those areas. On our people, we remain focused on a performance-driven organization with significant improvements in employment engagement by staff and for staff. As a foundation to our strategic drive for the best talent in the industry, the group recently graduated 29 trainees from our Wapic Academy, covering both Nigeria and Ghana. Our investments in talent development are expected to manifest in productive gains. We are inculcating the behaviors, culture, and innovation associated with leading customer experience-driven initiatives. This brings us to the end of our presentation, ladies and gentlemen. Thank you for listening in. The floor is now open for questions and answers. Should you wish to ask a question, please unmute your phone or computer at this time and speak. We would like to ask that you indicate your name and your company as you ask questions. Thank you very much.
Good afternoon.
Good afternoon.
Oh, okay. My name is Wale. I'm calling in from United Capital.
Could you please speak a little bit louder?
Okay. Good afternoon. My name is Wale. I'm calling in from United Capital.
Thank you.
Okay. So, thank you for your presentation.
Thank you.
Trying to understand something here. There's a little bit of, I don't really get something between the first two presentations, the first two slides at the beginning of the presentation for the investment. Can you hear me?
Mr. Wale, I'm
Yes.
struggling to hear you. Could you please be a bit more audible?
Okay. I said I'm trying to understand something on slide 9 and slide 11. On slide 9, I can see net investment and other income declined about 41%. And the following slide, there's a 100% growth. So I'm trying to understand what happened between those two slides, because of apparently yields have been really attractive so far in the year. So if you can shed light on that, I will appreciate. Then I also like to understand what drives claims expenses. I know that for obvious reason, last year was quite tough for most businesses in Nigeria. So probably there are more claims due to pressure in the economy. And this year, the claims ratio has actually improved, much in line with the general improvements we've seen in the economy. But I want to really get a clearer sense of what is driving the claims. Is it that as the pressure on the economy, you know, people come around to ask insurance claim? Because I know that it's broadly driven by general accident. Now, the fact that there's a huge pressure on the economy in 2016, does that translate into increase in accident? I'm not trying to make any inferences. I'm just trying to get what is driving claims generally for your business. Thank you.
Thank you very much, Mr. Wale from United Capital. On your first question, asking clarification between slide 9 and slide 11.
Yes.
Slide 9, which makes reference to the decline in the net investment and other income. This is inclusive of the FX gains of 2016 that is not repeated in 2017. Whereas slide 11 has separated the real impact from investment income. So slide 11 is saying that on our normal business, we improved on our investment income by 100%. The impact of the FX gain is seen on the other operating income, which is the next line after that. I hope that clarifies your question. Then on the second question, yes, claims in 2016 were largely driven by inflationary pressure within the economy and the exchange rate, the impact of exchange rate on replacements. Ladies and gentlemen, it will appear that someone in the participation group is breathing into the microphone. Could you please mute your phone until you are ready to speak? Thank you. Ladies and gentlemen, are there any further questions, please? Ladies and gentlemen, we'd like to confirm if there are any other questions. In the absence of any further question, we would like to bring this presentation to a close. And on that note, we would like to say thank you very much for your participation at this conference call. We look forward to having you on board again when we return to have our full year results presentation. Thank you and have a good day.